Good morning, Matthew Buckley, call sign Wiz. Welcome to this morning's market intel brief. Got a lot going on, going on in the market. Had a huge rally yesterday. A couple recent interesting rallies. Uh, what's on the radar scope for the battlefield this morning? Looks like the Greece Parliament's still talking away here. Should see a decision between now and 10 o'clock Eastern on the austerity measures. I think that the Greece approval might already be baked into the market. You might see a little relief rally out of the street, but folks, they're kicking the can down the road. They're restructuring debt that they couldn't pay. We're giving more money or more booze to a drunk who promises that they'll clean it up. It ain't going to happen. Some other good news on the battlefield this morning on the radar. Bank of America, huge settlement on some mortgage-backed security issues. $8.5 billion settlement here might help out the financials and get rid of some of that cloud that's overhanging Bank of America. I mean, it's down here at a $10 stock. It doesn't need bullish on Bank of America. Great company. Some also buyout activity. BJ's looking at a buyout here, about $2.8 billion buyout in cash for the wholesaler. I want to bring your attention to a trade we put on yesterday at Top Gun Options in our advanced skill-based trade alert. Now at Top Gun Options, everything's skill-based. You can't be flying a Hornet if you should be in a Cessna. And if you're a Hornet pilot, flying a Cessna is boring. So the trade alert that I want to cover that we put out yesterday to our subscribers is on LinkedIn. It's an advanced trade alert. It's a tight bear call spread. And let's take a look at it real quickly here. It was released yesterday, so the prices might be a little off. But obviously, if you subscribe to our trade alert service, you get these immediately emailed to you or via SMS. So let's take a look at this bear call spread on LinkedIn. Now, yeah, there's not too much to the left of that chart because it came out recently as an IPO, right? But our strategic mindset, and again at Top Gun Options, we follow, we're disciplined, we manage risk, we have checklists, we have trade plans, and we execute without emotion because emotion can get you killed in combat or in trading. Setting top in LinkedIn. Recently began trading publicly, so that carries a lot more risk than an established company. Also a volatile stock. That means we just need to keep our head on a swivel and take profits in this trade when we have them. It's a social networking site. Everybody just knows what LinkedIn is. But we believe it's also the poster child for Tech Bubble 2.0. People are partying with the stock like it's 1999. And I'm personally still getting over that hangover. I think it's extremely overpriced relative to what they're earning, which nobody really has a clue what they're earning. And the market is eventually going to wake up to this. They always do. Markets are efficient. So at 80 bucks a share, it's about 84-ish right now. It's got a market cap of over $7.5 billion and a PE around 1,200. I mean, that's cruising around space shuttle altitudes, and it's got to come back to Earth. We believe in the long term, maybe the mid 50s until this thing develops a track record. So that's our target. LinkedIn trading about 84. Commit criteria. Commit criteria are the reasons, the 3 to 4 sentences that you can blurt out at a cocktail party while you're in a trade. Why am I pointing my nose downrange and I'm going to squeeze off capital to take this thing out? That is commit criteria. We think it should be trading much lower. The valuation's overly inflated, and it's a little due to a short squeeze. As soon as people were able to short LinkedIn, they piled in, to that movie theater, and nobody really yelled fire. And in a short squeeze, those guys have to buy back those shares, and the stock keeps going up. It feeds on itself like a death spiral. But recently, LinkedIn got added to the Russell 1000. So you got mutual funds, you got hedge funds, you got money managers who have to add that to their portfolio. And that usually gives an initial bullish boost to it. So this is a pure fundamental story, folks. We don't have enough history to examine the charts, and the stock can be extremely volatile, move $5 to $10 a day. So as we're going to talk about here in a second, stay on your toes, and we can make some profits. So the tactic we're using is bear call spread, where the short strike are the July 90 calls, and the long calls are the July 92.5. So it's a $2.50 wide bear call spread, which you do for a net credit of about 70 cents or more. I got a little less than that yesterday, and your max spread is the difference between the strikes minus what you took in. So $1.80 in this case. Max profit is obviously simply what you took in. That's 70 cents per share or whatever you can take in there. Break even is the short strike plus what you brought in. So if you brought in 70 cents to do this trade, it's $90.70. Anywhere below that number, it's profitable on expiration. So just taking a look at the max profit there, about $1,400, about 70% probability of that happening based on volatility and some other factors. So, those are pretty good odds, 70%. About a 25% that you can get your ass handed to you. The full Monty, $3,600. But at Top Gun Options, we don't ride airplanes in the side of a mountain with our eyes closed. We usually bail out way before that, as you're going to see. Mid-course guidance. Most trade alert services say, hey, here's a trade. Good luck. God bless you. We'll see you at the other side. No. That's like handing a rifle to somebody and saying, hey, just march that way with this thing. Nope. Mid-course guidance. So we give guidance that, when this missile is halfway down range, here's your guidance. Time decay, theta is working for us. If we can buy back this spread at 20 cents, that's a nice profit target. We'll take it. If the market looks weak, maybe we'll just ride this thing in expiration, let both options expire worthless, and deploy our capital somewhere else. But like I said, this stock can move around $5 to $10 a day. A 50-cent profit is still a 29% return. Not too bad of a return there. We always have eject criteria. We never get into a trade without knowing when we're going to bail out, when we're going to pull those ejection handles without thinking about it, without getting emotional. So here it is. No more than 200% of our credit, which would be a $1.40 loss in this case, 70 cents times 2, which would mean we'd have to buy back the spread at 210. That's our eject point. Give the jet back to the taxpayers. Get in your parachute. Profit goal, though, is 70% of the credit. So if the spread decreases in value to about 20 cents, we've hit our target goal, and let's take our capital and live the fight another day there. Once we hit an exit, all we do is unwind the trade by buying back to close the July 90 calls, selling to close the 92.5 calls, obviously as a spread, and that would be for a net debit, obviously. Contingency plan. We always contingency plan right now when things are going well. We don't contingency plan in the middle of battle. That's the worst time to contingency plan. So if the market begins to rally sharply on this Greek news or some other great news, let's just simply exit the trade. Simple, tight vertical spread. Doesn't warrant much adjustments like some of our more advanced strategies and tactics here at Top Gun Options, like butterflies, condors, broken wings, all that stuff. So we'd simply get out and not play with this one too much. And you always close a trade at Top Gun Options if your commit criteria changes. If those 3 to 4 sentences you can't say with a straight face at a cocktail party why you're in a trade, you're going to get killed. And we already covered the exit point. Let's take a real quick at how I got into it personally here. Pull up LinkedIn on my Trade Monster platform. You can get a free Trade Monster paper trading account if you go to trademonster.com/TGO for Top Gun Options. So I actually got in at 63 cents. Couldn't get that 70 cents from yesterday. Still a good trade. And I actually did it for 30 contracts because that's based on my personal risk criteria, because I will never risk more than 5% on any one trade. That's just my personal rule of engagement. You should have your own. So the most I can make is about $1,900. The most I can lose, $5,600, and you can see the probabilities of that happening. 63%, 31%. There's my break even, that 63 cents that I took in, and obviously the risk to reward ratio. Down here is a good thing to look for. Events to watch out for. Those are our threats. Those are our threats to success. Not any earnings issues, no dividend issues to worry about because I don't think they're making any money. But the only event or threat to watch out for is obviously expiration. So nothing huge going on there. So folks, that's our market intel brief for this morning. If you want to see how this trade plays out, how our professional trading team at Top Gun Options manages this LinkedIn trade for maximum profitability or minimum loss, simply go to topgunoptions.com, click on the Trade Alerts tab, and scroll to the bottom, and go ahead and enroll in our Trade Alert service. You get 2 to 3 potentially profitable trades each week. You get them emailed to you. You get an SMS alert whenever there's a change made to it, and you obviously get access to this full member site where you can also take a look at the portfolio manager and see all the current positions that we have in that service. So that's it for today. Going to be watching what's going on in Greece. And Matt Buckley, call sign Wiz. Happy hunting. Make sure you hedge. We'll see you tomorrow.